Hello, my name is Kojiro. Welcome to my channel, Good Vibration. If you have not yet subscribed to this channel, well, click here to subscribe for future videos about the law of vibration, trading, and the financial markets. In this video, I will try to review and unveil the concept of the law of vibration as related to the financial markets and trading, and probably related to anything and everything else in life and existence, because the law of vibration is a universal, immutable law. So let's start by deconstructing and understanding what W.D. Gann, the famous trader, had to say about this mysterious law of vibration. In 1909, as stated in Mr. Gann's interview by the financial publication, the Ticker and Investment Digest, which was a precursor to the Wall Street Journal, he says, I'm going to quote him here to find exactly what he means about the law of vibration. Then he says, I soon began to note the periodical recurrence of the rise and fall in stocks and commodities. This led me to conclude that natural law was the basis of market movements. I then decided to devote 10 years of my life to the study of natural law as applicable to the speculative markets, and to devote my best energies toward making speculation a profitable profession. So we can see here that he's talking about natural law. Very important point here. About nature. It is not man-made. It is natural law. It comes from nature. And it takes a lot of time to learn. He's saying he took around 10 years of his life of study. And then he says, after exhaustive research and investigations of the known sciences, I discovered the law of vibration, that the law of vibration enabled me to accurately determine the exact points at which stocks or commodities should rise and fall within a given time. So now he's talking about sciences, and I think that he refers to the known sciences like physics, chemistry, biology, mathematics, all the known sciences to man. And then he openly says that it is the law of vibration that enables him to accurately determine the exact points at which stocks or commodities should rise and fall within a given time. So this law of vibration is something, he's talking about precision. Not only time, but price as well. The X and Y coordinates, the trading charts. And he's talking about the predictive and forecasting power of this law as applied to the financial markets. It's something very exact, very precise. In another paragraph, he says, the working out of this law determines the cause and predicts the effect long before the street is aware of either. So basically, he's saying that this law allows to know the cause before we manifest anything as price action in the charts. And then he adds, most speculators can testify to the fact that it is looking at the effect and ignoring the cause that has produced their losses. So Mr. Gann is saying here that what produces our losses is because most of the traders, they watch at price action only, but they do not know the cause. So he's saying that the cause is more important because the cause, precedes the effects. Okay, then he says, it is impossible here to give an adequate idea of the law of vibration as applied to the markets. Well, here he's being secretive, which is very common in W.D. Gann. And then he says, however, the layman may be able to grasp some of the principles when I state that the law of vibration is the fundamental law upon which wireless telegraphy, wireless telephone, and phonographs are based. Without the existence of this law, the above inventions would have been impossible. So he hints here this law is actually invisible like wireless technology because it works perhaps in much higher frequencies than what our five senses can grasp and detect. It is a high order frequency, so to speak. So now at this point we have some idea what Mr. Gann's law of vibration is about. So let's investigate a little further what he meant about this law of vibration. In another paragraph he says, I have found that in the stock itself exists its harmonic or inharmonious relationship to the driving power or force behind it. So he's talking about some force, some power, some energy that drives the stock and causes it to vibrate, and this causes the harmonic or inharmonic relationship to that force, and that's the cause of the movements and the swings in the markets. Then he continues, the secret of all its activity is therefore apparent. By my method I can determine the vibration, he's saying, of each stock, and also by taking certain time values into consideration, I can, in the majority of cases, tell exactly what the stock will do under given conditions. So, in plain words, he's trying to say that each stock has a different vibration. It is not one and for all. And well, that this law of vibration has a powerful predictive and forecasting power. He also is saying that vibration can be calculated for each financial instrument. And he also mentions the importance of some time values. So this is very important clues he's giving. In another paragraph, he says, the power to determine the trend of the market is due to my knowledge of the characteristics of each individual stock and a certain grouping of different stocks under their proper rates of vibration. Again, here he's talking about different rates of vibration for different financial instruments. Then he says, stocks are like electrons. So now he's relating science and physics, electrons, to all this law of vibration. So he says stocks are like electrons, atoms, and molecules which hold persistently to their own individuality in response to the fundamental law of vibration. So the law of vibration is individual for each stock or commodity, but there can be a certain grouping of some stocks under their similar rates of vibration, and this is what helps to determine the trend of the market. Then he continues saying, science teaches that an original impulse of any kind finally resolves itself into a periodic or rhythmical motion. Now, this is referring to cycles, periodic and rhythmical motion. Also, then he gives some examples here, and he says, also, just as the pendulum returns again in its swing, just as the moon returns in its orbit, just as the advancing year over brings the rose of spring, so do the properties of the elements periodically recur as the weight of the atom rises. Now he is making an allusion to chemistry also. So he's talking here about science, about cycles, about chemistry, about physics, the known sciences. And then he talks about cycles ranging from small to big, and probably all the way to astral and cosmic cycles that have a periodic and rhythmical motion. In another paragraph, he says, from my extensive investigations, studies, and applied tests, I find that not only do the various stocks vibrate, but that the driving forces controlling the stocks are also in a state of vibration. So everything is vibration. The stocks and the commodities, they have their own vibration, but the forces controlling those stocks and those commodities are also in a state of vibration, so everything is vibrating. Then he says, these vibratory forces can only be known by the movements they generate on the stocks and their values in the market. So again, these forces are invisible to the naked eye. And he's saying that one way of knowing them are the movements that are caused by these forces. For example, the price action in the charts. When he refers to the values in the market, he's referring to the price action in the charts. And these are the effects of these forces and are the ones that we can see. We cannot see clearly the underlying cause, but we can see the effects. Then he says, since all great swings or movements of the market are cyclic, now he openly saying that movements are cyclic. They act in accordance with periodic law. So here he is talking of another law of the universe, the law of periodicity, of cycles, and probably the repetitive nature of cycles in themselves and in the markets. So we start having a better understanding of what Mr. Gann meant when he spoke of the law of vibration. Then in another paragraph he says, science has laid down the principle that the properties of an element are a periodic function of its atomic weight. This is an allusion again to chemistry and the table of elements. A famous scientist has stated that we are brought to the conviction that diversity in phenomenal nature in its different kingdoms is most intimately associated with numerical relationship. Now he's talking about numbers and relationship between numbers and proportions. Then he continues, the numbers are not intermixed accidentally, but are subject to regular periodicity. So these numbers and number patterns are repetitive. They repeat, and they are not random numbers, but they are related in proportions to one another. So this is very important. The changes and developments are seen to be, in many cases, undulatory. So he's saying everything has its own, in few words, he's saying that everything has its own rhythm, it repeats in its own waveform and cycles, it has a sinusoidal movement. So we can understand it as a frequency. Vibration is a frequency, and it is also a cycle. And this cycle is also periodic. It has an undulatory movement, a sinusoidal movement. So he also here he is saying he's talking about the importance of numbers, of proportion, number patterns, repetition. Very important to keep this in mind. In another paragraph he says, thus I affirm every class of phenomena, whether in nature or on the stock market, must be subject to the universal law of causation and harmony. Now he's talking about another universal law, the law of cause and effect, and harmony, which is another law, the equilibrium. Harmony is equilibrium. Then he adds, every effect must have an adequate cause. And he says, if we wish to avoid failure in speculation, we must deal with causes. Everything in existence is based on exact proportion and perfect relationship. So this is very clear, he's saying it there. Proportion and perfect relationship. Every cause and effect. And there is no chance in nature, because mathematical principles of the highest order lie at the foundation of all things. Now he's saying the importance of mathematical principles and in nature also. And then he's saying that there's nothing random in nature. And he ends this paragraph saying, quoting Faraday, and says, Faraday said, there is nothing in the universe but mathematical points of force, which is very true. In another paragraph, he says, vibration is fundamental. Nothing is exempt from this law. It is universal, therefore applicable to every class of phenomena on the globe, and I believe in the whole universe, including, of course, the financial markets. In another paragraph, he says, through the law of vibration, every stock in the market moves in its own distinctive sphere of activities as to intensity, volume, and direction. All the essential qualities of its evolution are characterized in its own rate of vibration. So, in few words, vibration explains everything about a stock or a commodity. It says here the intensity, the volume, the direction, everything. Then he adds there, stock, like atoms, are really centers of energy. Therefore, they are controlled mathematically. So they are energy. That vibration has energy, and they work like atoms, and they are controlled mathematically. So mathematics and numbers is very important, their relationship. Okay, then he adds, stocks create their own field of action and power to attract and repel. Now he's talking about physics again. This is related to the third law of Newton. For every action, there's a reaction to it. And then he says, which principle explains why certain stocks at times lead the market and turn dead at other times. Thus, to speculate scientifically, it is absolutely necessary to follow natural law. So then he summarizes everything in natural law. This doesn't come from man. This comes from nature, natural law, and this is scientific. And to be successful in his methods, it is absolutely necessary to follow these laws, the laws of nature. Okay, so he's not talking here only about math, not only about astrology, not only about science, not only about cycles, but all these things together used coherently in a system and following the laws of nature, including the immutable universal laws, like the law of vibration, the law of cause and effect. And in this way, one can be successful doing what Mr. Gann did, which was forecasting the markets with a high degree of precision. And the last paragraph, he talks about the law of vibration. He says, after years of patient study, I have proven to my entire satisfaction, as well as demonstrated to others, that vibration explains every possible phase and condition of the market. So markets are not in any way random. And his method actually works and was tested and proven by him. And clearly he says that the markets are pretty much predictable if you have the knowledge and abilities required to forecast them successfully using the law of vibration. Okay, now we have a more complete and clear understanding of what W.D. Gann meant by the law of vibration. But where did Gann study and gather this information from? So, many of his concepts are based on natural law and scientific knowledge, as he plainly states in his own explanations. But he also based his method in ancient wisdom, ancient Hermetic philosophy, and esoteric occult knowledge. For example, books like the Hermetic and esoteric book the Kybalion, to name only one of many books and sources in existence about these topics. And this book was written anonymously by the three initiates in 1912 and was later attributed to mentalist and writer William Walker Atkinson. He was a contemporary of W.D. Gann And well, this book was published by a Freemasonic publishing company, and it was no secret that W.D. Gann was a high-ranking 33-degree Freemason. So we can see clearly a relationship and influence of these Hermetic and esoteric concepts used by Mr. Gann in his trading methods and techniques. So this book, the Kybalion, is a study of the Hermetic philosophy of ancient Egypt and Greece. And well, the teachings here are attributed to an ancient master called Hermes Trismegistus. And this book tries to explain the universal and esoteric 7 Hermetic principles. There are 7 Hermetic principles, which are okay. Let's have a quick review here of all these principles. Universal principles. Number 1, the principle of mentalism. The all is mind. The universe is mental. Number 2, the principle of correspondence. As above, so below. As below, so above. Number 3, the principle of vibration. Nothing rests. Everything moves. Everything vibrates. And this is the one concerning to the law of vibration. Number 3, there. Number 4 says the principle of polarity. Everything is dual. Everything has poles. Everything has its pair of opposites. Like and unlike are the same. Opposites are identical in nature, but different in degree. Extremes meet. All truths are but half-truths. All paradoxes may be reconciled. Number 5, the principle of rhythm. Everything flows out and in. Everything has its tides. All things rise and fall. The pendulum swings. Swing manifests in everything. The measure of the swing to the right is the measure of the swing to the left. Rhythm compensates. Number 6, the principle of cause and effect. Every cause has its effect. Every effect has its cause. Everything happens according to law. Chance is but a name for law, not recognized. There are many planes of causation, but nothing escapes the law. 7, the principle of gender. Gender is in everything. Everything has its masculine and feminine principles. Gender manifests on all planes. So, well, I'm not going to review thoroughly all these principles in this video. Only the third one, the principle of vibration. However, we can see that many of these universal principles are related to many of the things that W.D. Gann speaks in his explanations of his method and techniques about the law of vibration. So, what is the law of vibration? So the law of vibration states that all is vibration, that the whole universe is vibration, that everything within this universe is in a constant state of motion. Nothing ever rests, that everything vibrates and, well, is at the end energy. And this energy or force or power cannot be destroyed, only deflected or transformed. And all this is true, as modern scientists have confirmed. Vibration occurs from the quantum level, subatomic particles passing through electrons, atoms, molecules, energy, the human body, the mind, the earth, the planets. Passing in everything, it works in everything, all the way up to the stars and galaxies. It happens in every phenomenon in existence. So we can also see this law is fractal. Just imagine like a galaxy revolving around a massive black hole, and then the planets revolving around the sun, all the way down to the atom where the electrons revolve around the nucleus. So vibration equals motion, but in an ordered way. It is not a random, chaotic motion. It vibrates and moves in cycles, just as frequency does. Like, for example, sound, light, ultraviolet rays, X-rays, and gamma rays, and even beyond, just to give an example. So, if you know the vibration of something, you actually know its energy, its frequency, and you will know exactly when that particular vibration rises and when it falls, and at which periodic intervals it does this. And there is a different and individual vibration for everything in existence. Everything has its own vibration. Vibration is exactly the same as the sinusoidal rhythm of a frequency. And this type of phenomena, being an immutable law of the universe, is present in everything, including, of course, the intricate movements in the financial markets. So this law was so important that even the ancients said that the one that deciphered this law will have the scepter of power. Very interesting, this concept. So, deciphering the law of vibration in trading and the financial markets is not, it's not easy. It takes a lot of time, a lot of work and effort. And well, through many years of patient and disciplined study and research in many areas of knowledge, I came to the conclusion that the law of vibration as applicable to the financial markets is based on 4 main pillars. And I know many Gann students will disagree with me, but this is what I have found in my studies and research. So, as I said before, it is based on 4 main pillars. Basically, the quadrivium of the ancients, in the literal and the esoteric way. The quadrivium is based on 4 areas of knowledge: music, geometry, arithmetic, and astronomy. And it is all based in natural law. Many thinkers believe that the quadrivium is the study of number and its relationship to space and time. So we start seeing here a connection to how the market, the financial markets operate, because they operate in a realm of space and in time. Those are the 2 main coordinates there. So in other words, arithmetic was considered pure number, geometry was considered number in space, music was considered number in time, and astronomy was considered number in space and time. Everything was considered equally important, and many mystics like Pythagoras and Plato said that here lies the keys to unlock all the deepest secrets of the universe. Very important, this concept. So, number 1, music. Music is related, to vibration, proportion, scale, number patterns, octaves, thirds, frequency, proportion, rhythm, harmonics, cycles, time, timing, and all these things are important. Number 2, geometry. Sacred is related to sacred geometry, to architecture, to form, to angles, to lines, to proportion, to shape, to all the squares, triangle, hexagons, circles, that Gann used, to motion, to division, to direction, to scale. It's very important, all these concepts here. And Number 3, arithmetic, is related to math, to mathematical concepts, to number series, to number patterns, to numerology, to quantity, to proportion, to sequence. And number 4, astronomy, is related to cycles, to also astrology, to vibration, to periodicity, to time, also to astro and cosmic cycles, to motion, and all these things are important. And they are all important, not one, all of them are important. So all of them are, I believe, equally important to understand Gann's methods and techniques. And it is the coherent use of all the elements and components as a system that can be of real use trying to predict and forecast successfully the exact changes in price and time in a financial instrument, just like Mr. Gann did. And I believe ignoring one of the components may lead to only partial results. And the correct use of all the components is what gives a true, full, completed system with, you can say, beyond impressive results. But it is not easy to achieve because it takes a lot of work, a lot of effort, and time, studying wide, deep, and varied fields of knowledge in many areas and disciplines. And it's very difficult to understand and master everything in the literal and the esoteric way. And the whole working system is what I think Mr. Gann called the law of vibration, the whole coherent system. And I say here I'm saying what I think Gann called the law of vibration, because I never actually saw Mr. Gann working his method directly. But at the end, no matter what method comes out of this study of anyone, of any seeker or Gann student, it has to work, and it has to be profitable and consistent. If you don't make money and it's not consistent, well, it doesn't work. It's useless. So, well, next I will show an exercise I did in real time, showing this concept of the law of vibration. Here I am in the micro S&P 500 future contract in the 1 minute time frame, and I did an exercise in real time, just to show an example of the possibilities using the law of vibration, where I'm going to place an arrow to show the time where there is going to be a change in trend or impulse before it actually happens. Maybe it's not a trend, it's just a change in impulse, in energy, force, when it changes from the up force to down force, or down force to up force. That's what but I'm gonna show this actually before it actually happens. So I did this exercise for about around an hour, where many arrows occur, just to rule out any coincidence or chance of occurrence, and I have done this many times. So it always has the same results. So because it is too long, because I recorded for more than an hour, a little bit over an hour, I am going to speed up the recording. And this same concept works in any time frame and any financial instrument, once you have decoded its own, its own vibratory rate or vibration. And well, this is not my whole method, just a component of it. So we are going just to see, the changes in impulse in time, mainly. Okay, let's go. Okay, here we are. This exercise I did Takes around 1 hour. I'm pretty sure this will be. So notice I'm placing the arrows. It'll be over an hour it takes this exercise, and well, of course it's the speed is like 10 times more, so it's gonna take around 5 minutes. So notice I am placing the arrows before we actually change the trend. So here we can see change the trend there. I'll place another one here, and it changed the impulse. Well, I will not say is the trend is changing. I will say the impulse, the energy, it's changing. And you know, from the downside again to the upside there. So as you can see here, changes there, again changes there. You see, it stops there. So it should, that signal should change direction, impulse, trend, energy. There it goes. You can see the well, it did. That was a small one going down again. So this works in any time frame, or you know, on any financial instrument, and it's very interesting because well, we can see that the markets are not random. Here it changes again, and very interesting. Again to the upside, this signal there, but that one was off by 1 bar. We can see the low vibration in the works there, how it is working. And this is the the S&P 500 future micro contract, and going up again. Gonna place this that arrow there, so we can see clearly the change in impulse. You see here, there it changes again there. So micro impulse, micro trend, well, whatever you want to call it. We have a doji there in that signal, then goes up again. And there's a lot of things happening, more than you know, in the works. There are a lot of principles and concepts working there, and I've done this exercise a lot of times, even in in different time frames, different financial instruments, in stocks, commodities. It always works. It's impressive. Why? Well, the reason is universal immutable laws. It is not, as some people think, it's not, rubbing a crystal ball. It doesn't work that way. This is, well, it is scientific. It is based on natural law, the laws of the universe, in energy, in science. So, but it is not comprehended by many people very well. And as I said before, here we can see how it's unfolding in front of our eyes. The continuation there. So we can see clearly the change in impulse every time, and there it should end, change again to the upside. People say it only works because supply and demand. Well, of course, all those things are important, but there is an underlying force within everything that makes the things work this way. Here ends, and again to the upside. It took a little bit over an hour. Okay, so that exercise took around a little bit over an hour. This is 1 minute bars, candlesticks. So here we have I want to show how many of them we got right. So how many arrows signals did we have there? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. We have 20 signals in about over an hour, like 1 hour and 6 minutes, I believe it took that exercise, because I wanted to rule out coincidence or luck or or chance. So the only way I've done this, longer time periods, longer time frames, and for the purpose of this video, I used the 1 minute time frame, and the speed of the video I had to is like 10 times more, so I could show this in one cut shot and scene of the video. So let's check here. We have here how many we got wrong, right or wrong. We have an impulse here to the upside. Here we can see we get the first signal, and it's changed to the downside, the energy. So this is an okay signal, comes all the way down to here, it goes up again. Then we have this second signal here telling us that it's going down again. So it is right, change in impulse from up to down in the energy or trend or direction. Well, it's not a trend, it's actually direction. It goes all the way down to here. We have this third arrow there, which is telling us that this impulse to the downside is ending there. So this is okay, this signal. The next signal here we have the upside, and it's telling us we are going to the downside, and it goes down again from this one here, because this actually it is a inverted hammer there, and telling us we're going down. This is the signal actually going down. It doesn't actually tells nothing here, and starts going up again, change in impulse here. So yes, there it stops this force or impulse to the upside, and it starts going down. And this one, well, this one technically didn't fail, although it's a small impulse. So I have other stuff to rule out this type of things happening in trading, because this is a very small bar. But technically it didn't fail, it changed impulse, energy, direction, yes. Then we have this one here, which is signaling the end of this micro trend here, the downside. And we have something like a little range like here, mini range there, and this bar here, this signal here is signaling to the upside again. So and off it goes, big impulse, big energy there. The next signal here, it's actually off by 1 bar. You can see, because actually it had to be here, the signal had to be here or here, but it actually gave us the signal here at this point. So I have to mark it wrong, failed signal, because it has to be exact or it won't work in trading. If you have a signal that's off by 2, 3, 4 bars, it's useless, won't work in real-time trading. So this is a wrong signal. We have 1 here, off by 1 bar, and change in impulse to the downside, it corrects there. And then this signal here is signaling change in impulse to the upside. So we have a correction here to the downside, and it's going up again. The next signal is telling us, okay, we're going down again. So we're going down. Here you can see it goes down all the way here. The next signal is telling us, okay, we're going up again. And there you can see here in this green one here, it goes up again. Then we have this signal here, which is, well, technically it is a failed signal because it is a doji. So it gave us a doji. It should have been red, this bar here, but it was doji. This happens sometimes, and this happens because the actual demand and supply overcomes the vibrational energy of the financial instrument. So this actually should have been red. A little, correction, mini correction there. But actually, yes, the trading power overcame that force there, or equals. If it equals or overcomes that force, it happens this, or this actually here. So it is off by 1 bar because instead of going down, it goes up a little bit because there's a lot of force, a lot of momentum. Then it goes down. It happens. So this is the second failed signal because it's useless in real life trading. This one here. So we have two. One here, one here. The next signal there is, then it goes up, it comes down, and this signal here is signaling us the continuation of this trend to the upside. So there it goes. Corrects a little bit and off it goes. And we have here, corrects again. And we have this signal there to the upside again. Change in impulse, here it ends this correction here, and we go up again. So you can see how energy starts going up again. And we have the next signal here, it's telling us, okay, change in trend again, this is green, this is the highest point, so we're going down again, direction or energy or impulse, down, so we go down. So and actually here at this point, we see that the trend is actually changing to the downside. It was all upside, then it changes to the downside. And we get this other signal here. And this is a good signal also because there was a little correction to the upside here, these green bars. And then it's signaling the continuation of this trend here. And off it goes to the downside. And we have this signal here, which is signaling a change in trend or impulse again here. There, and this, from this signal to this signal, it's saying, okay, we're not going down anymore, we're going to start going up. The energy is changing to the upside, and off it goes. Green, there was a green bar, then start changing again. This is a little bit range like here. We have green again, and then as this bar closed green here, this one is changing impulse again because it's red, then green again. You see? Then we have the last signal here, which is signaling that this down force or down trend or down impulse, it's going to change again. And it does. Then it's green again here. So we have two signals, this doji here and this one here, which is signal is off by 1 bar, not good enough. So it's 2 out of 20, 10%. So the good ones were 90%. So the accuracy of the whole exercise was 90% accuracy. And I have done this a lot of times, many times. I've done this exercise in different time frames, in different using the different financial instruments, in real time, in stocks, in commodities, and it was always the same. So I have to rule out coincidence or chance or luck, because it is not actually. Markets are in any way random. They have an order. They have their movements are not random in any way. So I think the random walk hypothesis, it's flawed because, Well, if markets were truly random, there was no way nobody can do this in real time. Maybe, you know, you get a streak of good luck or chance, or, you know, but then it won't work. But I've done this exercise so many times in so many years that I came to the conclusion that they are not. That actually what I call the law of vibration works very fine. And this is not, you know, like rubbing a crystal ball or anything. It has nothing to do with luck or rubbing a crystal ball to know the future. No, it doesn't work that way. It is actually science based in natural laws, as Mr. Gann said. Although I never saw him working his methods, but I did study what he studied, and well, this is my conclusion. So, well, it works in the markets. And well, I usually don't trade the 1 minute, but this works in every time frame and every financial instrument. And well, here, this is not all my method, because there are other stuff I use also derived from Gann's methods that tells me, you know, the price coordinate. This is only, we're talking here about time only, and other stuff. And it starts, you know, working coherently in a system that actually can be used in real life and in trading. Because if it doesn't work, it's useless. Doesn't matter how much people, how much study or effort or they have put into their methods. If it doesn't work, it is useless. So, well, this is my conclusion. And as I said, I use a lot of stuff, a lot of things here are happening, more than one thing than one can imagine. Using all the methods that I said in this video before. Not only mathematics, not only astrology, not only geometry, not only cycles. It's all the thing working together into a coherent system. Okay, that's all. Well, I strongly recommend that you watch this video here, where I trade my method in real time, live, using the same concept. And if you already watched this video, well, okay. And if you like this video, give me a like, and don't forget to subscribe to my channel for future videos about the law of vibration, about trading and the financial markets.